Good morning, good afternoon, good day. Welcome to my live market meeting, 28th May 2020. Now it is 8 p.m. Eastern Standard Time. First, let me check. Are you able to hear me and see my screen? Hi, Ralph. You may use the YouTube live chat panel to let me know if you can hear me and see my screen. Thank you. Let's begin. Disclaimer. I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Give me 1 minute, please. Let me get my drawing tools ready. Okay, let me go back to the first page. I want to point out some things. You already know about my YouTube channel, Twitter page, and my traders forum. I came to know that some of the traders, they are receiving my notification from the forum. For example, when there is an update of a software, if they have some queries, they write to me, and usually I reply on the same business day or next day because of the time zone difference. But some people may not be receiving my replies. That may be because these email IDs, usually the tradingprofitably@gmail.com ID, email from that ID may be filtered out at your end and it may be going to spam folder. If you are not seeing my reply in a day or two, it is most likely because of that, not because I am not responding. I wanted to mention that. You may check for my email in the spam folder. Alternatively, you may pass me your phone number or some other means of communicating with you so that I can contact you more readily. As usual, this is a live session. I have not looked at the things that I am going to discuss. We'll look at it together. I'm going to use Q Global and Q Finder for technical analysis, charting and scanning. And I will also use Q Elite. Q Elite runs on TradeStation. Q Global, Q Finder runs on MetaStrategy. Then for fundamental analysis, I will use Q Vital. Sector industry rotation analysis, I will use Q Edge. And for index analysis, market level index analysis, I will use Q index. One more thing to note that I am working with my US based developers to switch the server from HostGator to Amazon Web Services. Therefore, in the coming days, I may send a release of all the systems to you, all of these systems, requesting you to install. When you install that, you may do a fresh install. How to do a fresh install? If you go to my traders forum sagannandi.com, there is a category for download and install. If you go there, there are the install steps for Q Elite, Q Global, Q Edge Vital and Index. For Q Elite and Q Global, if you go inside those categories, you will see a topic, removing older components before installing a new version. One for TradeStation 10 Q Elite, one for TradeStation 9 Q Elite. Similarly, if you are using Q Global, if you go to the Q Global install folder, you will see a topic, removing older components before installing a new version. Usually I do not request you to remove older components, but because this time we'll be switching server from HostGator to Amazon Web Services, kindly remove the older components completely before installing the new version. It may take few more days for the developers to get that ready. Once that is ready, I will do some testing and send it to you. I will send the notification through the forum. So please make sure that if you have not registered on the forum, you are registered. That way you are always intimated about the latest updates of the softwares. You can see a button here, my picture several years ago, 5 years ago I took it in Thailand. If you are logged in, you can see your name or initial here. If you have not logged in, if I log out, you will see login or sign up. You may use the sign up button to register if you have not registered already. Let me log in again. You may click the keep me logged in button. That way you don't have to log in every time. That were few announcements. Let's now look at the market. While I was going through those few things, I already ran the Q Finder scans. Q Finder that is looking for all the bearish signals and Q Finder that is looking for all the bullish signals. There on Q Global, I can run it on real time. They don't need the day's candle to be completed. So I ran it already. This is the result. I am going to transfer the data to Q Finder, but before that, let me highlight one more thing. I tend to run these two scans every day on a list of liquid stocks that I have. Not only liquid, but they have at least 5 years of history. Why I prefer to add the condition for 5-year history is because in Q Vital and Q Edge also, we have fundamental data for up to 5 years. That is why I look for these stocks. Then I am more confident about the fundamental analysis that we are doing through Vital and Edge. How to create this list of stocks? If you are creating them on the USA market, you can go to MetaStocks public online data lists, go to equities North America, choose your source as NASDAQ, NYSE and MX. Then come to the scans at the top, run these two scans, liquid stocks and 5-year plus data, and choose this option, use the result from the preceding exploration. That way it will first find the liquid stocks, it will run the scan number 1 first, output of that will be sent to scan number 2. Once scan number 2 is completed, you will get the list of stocks, that is usually this 1500 plus stocks that I have. You may save it as a list. I have named it USA liquid stocks with 5-year history. I usually don't change it. What I do is every 1 month or every 3 months I may come back and rerun these two scans to recreate the list. That is how I created the list, and once created I am using that list every day. Back to the result of QFinder bearish and bullish. I'm going to copy the data, go to QFinder. For pasting, I'm going to click the binocular button. Binocular is the icon for Explorer in Metastock. Whenever you see binocular button, that shows that we are transferring data from Explorer to Finder or to Vital. So I got the data for bearish scan. Let me go back, get the data for the bullish scan. Now I can close it, put my focus on the chart application. That is the application I'm going to use usually. Come back to Finder, go to Bullish tab, and now I have the data in a visual manner both in the Bullish tab and Bearish tab. First thing I'm going to do is look at the home page, and you can see some interesting aspects from this graph. I shared it on Twitter, but let me go through it again. Here we have three kinds of signals. Strength signals, that is showing either pressure or gap. Continuation signals, they can be breakout, pullback in uptrend or retracement in downtrend, and the go with flow trend following setup. These are continuation signals. And then to the right we have the reversal signals that can be touching a memory line, bouncing from a memory line, headwind reversal signal, box sideways market or double top double bottom reversal signal, and reversal candle. We have all the signals from those 1500 plus stocks. What do we see today? We see that the number of bullish gap ups are very large. 204 stocks gapped up at the open. Gap down were very few. So the opening of the market was very bullish, not only in terms of the market ETFs, but in terms of individual stocks also. Then what happened? If you look at the reversal signals, memory touch, many more stocks touched memory resistance 96 than touched memory support. And out of them, more bounced down also than bounced up. In terms of the headwind reversal signals, many more were on the bearish side, 48 versus 0. For potential box trade setup also, 62 bearish side to possibly only one bullish side, and reversal candles also 127 bearish side to only in the bullish side. This very clearly showed that though the opening today was bullish, not only again in terms of market ETFs, but in terms of individual stocks, gradually the market reversed. And this reversal of the market was not evident from the market ETFs. Till afternoon, the market ETFs were up. QQQ Nasdaq ETF was up by more than 1%. However, if you use the Q finder, you could see the reversal happening during the day. There was another Q program that showed the weakness of the market from the beginning. In fact, right from the market open or from soon after market open. Not one program, there were two other resources. One was Q Elite Market Breadth, and then another one was Q Edge. Let's look at Q Edge first. In Q Edge, now we have the sector advanced decline. You can see now it is showing 1 day. Why it is showing 1 day? Because now real-time data is not coming. It is of market hours. During market hours, you will see this caption changes dynamically to real-time, and the real-time picture is shown. Same is true for industry advanced decline, stock advanced decline, and even here now it is showing percentage change 1 day, but it would show real time during market hours. And this was one requirement that came from my friend and a great gentleman, very nice trader also. I always watch his videos, Dr. Jeffrey Scott. This input came from him, and I spent 2 nights almost without sleep trying to make it ready before the market day Tuesday, and I think I did a pretty good job. Another thing you may or may not use, most of you may be using only the American market for trading, but in fact QH can be used for other markets also. You may need to subscribe to those exchanges like Australia, China, India, etc. to make it real time, fully real time. But otherwise also with delayed data, for example, if I choose Australia, you will see now it is validating Australian market, retrieving the data. If it can retrieve all the data, you will see the graphs will change. Let's give it a few seconds. It has updated. The updated date time is based on my computer time, which I have set to Eastern Standard Time. And you can see that now the Australian data has come in. This is Australian data. How I know? If I click the go to sector button and go to stocks, you can see all the stocks are now Australian stock. The market is not open yet, or I may have delayed data. Market may be open, but I may have delayed data. That's why sector advanced decline is showing 0. That is fine. I just wanted to demonstrate that in addition to analyzing and trading in the USA market, you can use Q Edge and certainly Q Index and Q Vital and Q Global for global markets, not only for the USA market. Q Elite on TradeStation is the only program that works on USA market only, because TradeStation doesn't have data for other markets. I'm going back to the USA market. While it is okay, it is done. Let's look at the sectors again. The sectors are predominantly bearish today. 91% of the sectors are down. 10 sectors are down, 1 is up. In terms of industry, 82% of the industries are down, and in terms of the stocks in QH, that is the S&P 1500 stocks, 76% are down. That is what you see after the market close. But if you kept it running, and I always keep this program running throughout the day in streaming mode, QH, you could see that all these breadth graphs were bearish. They were more bearish than bullish. I think today never it became more than 50% green. It was always more than 50% red for sector, industry as well as stocks. One note on running it in real time, you may set the streaming mode properly so that it doesn't take too much of processing power, because QH is processing 1000 plus 1500 plus stocks and 100 plus industries and 11 sectors. If we keep it in true streaming mode, then every tick by tick it processes everything, recalculates everything. That is not required for sector, industry and stock data, fundamental data. We may use that for charting, but for Q Edge there is a setting. If you go to Thomson Reuters menu bar, go to settings, it will pop up a dialog box. Go to data retrieval. Under data retrieval, go to function and change from streaming, if it is set to streaming on your computer, to refresh frequency 5 or 10 minutes. I prefer 5 minutes so that I can see how the market is moving every 5 minutes. And even for my charting, I don't use 1 minute chart, 1 minute candle chart or chart. I use 5 or 10 minutes. So if I keep the refresh frequency to 5 minutes here, that is perfectly okay. Every time, even a 5-minute bar completes, I can see what is the status of the sector, industry and stocks. Remember that if you change it, it shows a message. Any changes made to the setting will take effect when you restart Thomson Reuters icon. Therefore, if you are changing this from streaming to 5-minute refresh frequency, then remember to apply. Click apply. I am not applying now. Click apply, come out, close the entire program, Excel program, and restart it. I am not doing that now. coming back then. That setting was important setting. If you have not set it, you may do that. Coming back to the actual data, the markets were looking bearish from the beginning from market breadth here in QH. It was also looking weak from finder from the beginning, and I mentioned there was another place from where I could see the weakness, that is from Q elite market breadth intraday, and I shared that also on Twitter. Here you can see the market internals for Nasdaq and NYSE, advanced decline issues, and also the up down volume for Nasdaq and NYSE. You can see that both Nasdaq and NYSE opened with a very large advanced decline number. Any number around 1500 or 1000 plus is already considered very high. It opened with very large advanced decline positive number and immediately dropped. After that it tried to go up little bit but not much, and then dropped further later in the day. If you look at up down volume, QQQ tried to go up, not much, but then dropped, and up down volume for NYSE, it could never go up. That was happening while QQQ was robustly going up. QQQ started dropping only after 1 p.m. Eastern Standard Time. However, the market breadths were showing weakness from the beginning itself. There was another indication of market weakness that you could see from real-time charts, that is from the market ETFs. I keep the 4 market ETFs open on one monitor, and you can see IWM created the early range high and low, could never go above early range high. It was hovering near early range low and then it dropped. I could take some day trade using put options and IWM, and I booked profit. I didn't hold on to the trade overnight because if you look at a glance weekly daily, there is no short trade setup on IWM. But I could use the intraday precision entry technique to take a short trade in IWM. Why did I take the short trade in IWM? Because this was the first to go below early range low. If you look at DIA, it could never go above early range high. It was inside early range high and low, and later in the day it dropped. QQQ was the strongest as it had been in recent times. It also dropped, but it closed inside the early range. And SPY initially went up, then dropped along with QQQ, and it closed below early range low. I keep these 4 charts open. In the morning session I use 5-minute interval, and in the afternoon session I change to 10-minute interval. Using these 4 ETFs I take day trades sometimes, and if by the end of the day the at a glance chart is showing a trade confirmation, I may hold on to that overnight. As I mentioned, IWM didn't give any trade setup on at a glance chart, but I could take a day trade. And why I took IWM again? Because this was the one to go below early range low first, and I could book some decent profit on that for a day trade. Therefore, we could see the market weakness from 4 different sources. The fact that IWM couldn't go up, the fact that DIA couldn't break below early range high was telling us that the market is not fully bullish. And remember, DIA didn't go up, however, USO, oil was positive. In spite of oil being positive, DIA couldn't go up. That was showing some mixed signal. The market breadth was showing weakness. QH is, of course, the most obvious way to find out the market breadth, and that was showing weakness from the beginning. And if you ran QFinder, you could see that after gap up open, there were more reversals. And even in terms of continuation signals in the middle, even in terms of the continuation signals, overall it was more bearish than bullish. Looking at that, what did I do? I was not looking to take any new long trades. If you have followed me on my traders forum posts, in recent days my posts were mostly on the bullish side, except one that I took on a bearish side. Let's review some of them. UFI. I shared that 9 days ago. It's useful to go through them. It's not a point whether they are making profit or loss, but when we look back, we can see that if we are trading with discipline, is it working out all right or not? I identified UFI as a long candidate buy point in an undervalued stock with high earnings growth, found in 5 different ways. 9 days ago I shared it. How could I find it? I could find it from Q Go with Flow long scan from Q Global Metastock, because Metastock doesn't need to wait for the candle to be closed. We can use the Explorer. UFI came in that list. I could find it from a long breakout scan. UFI came there also. Using Q Elite on TradeStation, the sonar, the radar is running in real time, doesn't need the candle to be closed. I could find UFI as a breakout and go with flow trend following trade setup. I could use Q Elite for that. I could find it from Q Edge, the best performing undervalued stocks. I ran it, you can see, at 12:42 p.m. Eastern Standard Time. UFI came to the very top. It was up by 11.25%. And I could also use a top-down analysis. Textiles industry was one of the strongest. This is a snapshot from Q Edge industry scorecard, run around 1 p.m. Eastern Standard Time. Textile was very strong. You could drill down, find the stock from textile industry. Again, UFI would have come. And it was undervalued stock with a short squeeze potential and positive and accelerating earnings growth, what I call a star candidate. In USA market, not many textile companies are left. It is showing 100% of the stocks went up. However, see that there is only one stock in the industry in the USA market now. In any case, this was a strong fundamental stock. The industry was very strong and it gave me a breakout trade setup. Usually I don't like breakout trades, you know that, but I don't mind taking them if the stop loss is narrow, as was in this case. It broke out of the triangle pattern. I could put stop just below the memory support in the daily chart. The weekly was also very bullish. That was what I found 9 days ago, 19th May, and I followed up today on the day when I shared the post. It was breaking out of the memory resistance. However, by the close of the day, it pulled back. If you were waiting for the market close, you wouldn't enter at the close on that day. Instead, you could enter the trade next day and use the fine-tuned chart to take the long trade. However, I was already in the trade. Sometimes I take a trade early because of my time zone difference, and sometimes I do that because I am in a hurry. Not a good idea, but to be honest, sometimes I take trades early. However, one thing I follow very well, I never let a trade go into a big loss. Never ever do that. In any case, I was already in the trade, and by today the trade had more than 10% profit. When that happens for stock trading, anywhere between 6% upward, I make sure that I take some money off the table. That UFI trade was a breakout trade. It closed with profit. I don't like to pick and choose. Let's look at the trades in the sequence they are coming. Tesla, I shared it today. It's not a trade taken yet. Equity, I shared today. I will go through equity and Tesla later. Let's look at SLG. This is a closed trade. Closed means at least partial profit has been booked. I shared it 1 day ago. This was a stock in asset management and custody banks, and you may see that the industry was not the strongest industry, but it was starting to improve, and the pace columns were showing that it was starting to accelerate. That allows me to buy a stock. By the way, because of the latest enhancement, you can see the real-time column is filled up during market hours. If you look at QH now, you will see real-time column is blank. Again, that was thanks to the input from Dr. Jeffrey Scott. Whenever you see real-time data, you know that this snapshot is from market hours. And you can see the timestamp here also, 10 a.m. Eastern Standard Time. I saw the industry strengthening, and then I found this stock, State Street Corp, ticker symbol STT, undervalued stock with positive and accelerating earnings growth. Again, a star candidate long side. And here I had 58 peer stocks. 88% of the stocks were up at that time. It also pays a dividend yield of 3.4%. Fundamentally, it was allowing me to buy the stock, and I took the trade once again on this day. You can see again, by the close of the day, it pulled back little bit, but sometimes I am in a hurry, sometimes I am in a different time zone. I want to sleep early. I was in the trade. Next day, it gapped up. I took a trade using what you can say Dr. Jeffrey's synthetic trade. I didn't use the stock. I used long call and short put. When it gapped up next day, the long call had more than 100% profit, and I was watching it using fine-tuned chart. I saw that in the beginning of the day it was not able to go up. Therefore, I booked full profit on my call options, but I was holding on to the put options. And this is the time I may go to the intraday chart and explain exactly what I did. STT. I'm explaining how exactly I identified, entered, and managed the trade. I already showed from the forum post how I identified the trade. I entered it somewhere here. I have to check the timestamp when I shared the idea. Let's see, around 10 a.m. So you can see I was in the trade in the morning session. Usually I take the trade first before sharing, because it takes quite a few minutes to make all the images and share it. I prefer to take the trade first. So I was in the trade early on that day. Meaning what? I was in the trade when it was breaking out of the early range high. I think so, because I see the snapshot is around 10 a.m. Eastern Standard Time. I was in the trade. At the end of the day, it pulled back little bit. That is fine. I was already in the trade. Next day, it gapped up. I had more than 100% profit on the call options. I booked the profit on the call options. Usually, I have noticed that if call options give 100% profit within 1 day or 2 days, it is better to book the profit. Usually, it will pull back, and if I want to go in again, I can buy it back at a lower price. Why? It's not because of the price move only, because when a stock gaps up at the open, the volatility is very high for the options. That does not show up on the options chain because options chain volatility data is delayed. It doesn't show up. But if you are trading options using intraday charts, you are tracking that, you know that when there is a gap up, the options prices are very high. And I took advantage of that. I closed the call options fully. But the short put options, I was not in a hurry to close. I was quite comfortable holding the stock. So I continued to hold the short put options. Then it went down, came back up, went down again, and it started to go up again. I bought back some of the call options at this point. By the end of the day, on the new lots that I bought, I had more than 20% profit, and I was holding the put options. Then today I saw that it opened higher but sharply moved down in the first 10 minutes. In the morning session, I was using 5-minute bar. And if you are watching this chart, fine-tune chart in real time, you will see something that is not evident from this static chart. That is how fast it is dropping, how fast people are selling. When it started dropping, I closed my call options and I closed my put options again. And before I did that, I carried out a peer analysis of STT using Q Vital to see is it an isolated incident or are stocks in the industry weak today. And I found that stocks in the industry were weak today, therefore I didn't want to hold on to the position. That is how I identified the trade here, somewhere here, managed the trade, exited some position, re-entered, and today in the morning session I exited full position. Again, if I am trading call or put options, simple call or put options, if the position has 100% profit in one day, I book profit. In fact, on the trading day, if there is 50% profit, I book profit. Usually it will allow me to buy back at a lower price if I wanted. There is a question, do I use weekly, monthly, or 2 weeks options? Now, when I took the trade in STT, let's look at the at a glance chart. I was taking it as a position trade. I didn't want to exit the trade. Therefore, I didn't want to exit it within one day. I wanted to exit someday with profit, but not within one day. Therefore, I used monthly options. If if the stock continued to go up, I would have exited partial position, and it is very easy to do with call options. When I have 100% profit, I could exit half position, 5 lots of 10 lots, for example, to get my money back and hold on to the remaining position. That is why I used monthly options, not weekly options. If I was taking it as a day trade, I could take it as weekly options. For example, I mentioned I took a day trade in IWM. That was a day trade because if I look at IWM at a glance chart, it is not allowing me to hold on to a short trade overnight. It's not bearish in at a glance. In those cases, I am okay to take a day trade using weekly options. For STT, because it was a swing trade, I took it using monthly options. And even that gave 100% profit. That was how I managed the trade STT. STT, this is a typo, SLG, right? Is STT, it should be STT. I took a trade in SLG also. Let's look at that. This one. And using the Q360 degrees analysis, I saw everything was bullish. It was at a lower price point and I'm very comfortable taking those trades. Either at the very high like Netflix or another trade that I will show soon, and at the very low like in SLG. What is there not to like in this stock? SLG, it had a gap up open on that day, and then it continued to go up further, gapped up with 7.7% move, went up by another 4.8%, closed the day, or at least when I took the snapshot, it was up by 12.4% relative to previous day's close. It gave a breakout trade setup and a bullish flow candle. It was at price extreme or pendulum low. I am comfortable buying stocks at those low price points. Office rates industry, it was accelerating right on that day. Using real-time chart, I could see that it was going up and accelerating at an industry level. Fundamentally undervalued stock, not accelerating but positive earnings growth, and 96% of the 53 peer stocks were up. That was very bullish. When I took the snapshot, it was up by 12%. And also it had a very nice dividend, 9.6%. That's why I mentioned what was there not to like about this stock. Of course, I had to look at the chart, and it gave a very nice breakout trade setup, and I pointed to many bullish signals. Let me take a while to go through all the signals that I could see. Sometimes we see the same chart but we don't read it the way it could be read, and let me take the time to point out to these 11 signals. In the weekly there was a sharp drop, so sharp drop that both thrust and jump became extreme low, that is the red colored dots came up. When thrust and jump in the weekly chart both start to show red dots, it is very likely the stock will go up, and it is not uncommon for the stock to go up, retest and go up again. In any case, if you see red dots in both thrust and jump at the same time, you may start to look for reversal trades. They work both on the long side as well as on the short side. In this case, it was extremely oversold. Then it went up. There was a watermark support level that was breached, and then price reversed back above the watermark level, creating a false downside breakout in the weekly chart, meaning the weak hands, those who bought during this up move, many of the weak hands got stopped out, and now there was nobody to sell the stock, so it was more likely that the stock will go up just enough at least to give me a profitable swing trade. So I could read that information that it was at extreme thrust and jump, retested the watermark level, created false downside breakout, the backdrop color turned bullish. All those were pointing to a profitable long trade, possible profitable long trade. And I noticed that though there was a retest and breaching of the watermark, the thrust and jump showed bullish divergence. They didn't go down so much. On the other hand, the OBV made higher extreme. Now the extreme levels of volume or OBV is on balance volume, based on volume, they can be read in two different ways. The extreme levels could be taken as a bearish move. However, after the extreme levels of OBV and volume, if price reverses, then we may conclude that this was an exhaustion selling. Otherwise, price would not reverse. So that was also bullish. And another thing I noticed that you see the weekly turned bullish both in shape and color. Of course, the week was not over yet, but still it was bullish in color also, shape also. And I saw it showed bullish pressure and U-turn. It also showed a bull release signal in the weekly chart, which was visible here also. There were all these 1 to 6 bullish signals in the weekly chart. In the daily chart, this very useful bullish headwinds came at the very bottom. Again, it is not uncommon for a stock to retest the low, which it did in the daily chart here also. A second bullish headwind came from there, price went up further. It retested the watermark again, just like in the weekly chart, created another false downside breakout. And when I shared it, it was breaking out of the memory resistance with a bullish flow candle color. The stop was narrow, therefore I was comfortable taking a breakout trade in this case. And you can see now how you can read the different signals. Everything was pointing to a bullish trade on the technical charts, in terms of fundamentals, in terms of industry. I again took it using call options, long and short options put. This is what happened. Just like STT, next day it gapped up. I had more than 100% profit from my Schwab account on the call option side. So similar to STT, I exited the call option first. Again, if you have 100% profit in call options, again you can see it was monthly call options, June option here. If monthly call options give 100% profit in a day, it's better to book profit, not wait. Because usually, even if the stock is not coming down, the option price will come down. So I book profit. Again, I hold on to the short put options, and today I exited that. Today I exited full position, just like in STT. Let's look at SLG today. I entered the trade. Let's look at the timestamp again from the post. Then I remember when I took the trade, you can see 1548. So it was just before market close, sometime before market close. I run the finder, I find a trade and I take the trade. This was such a case. Near the market close, I took the trade. So I took the trade somewhere here rather. Next day it gapped up. I had 100% profit. I booked profit on the call option. I didn't re-enter call options in this case. When I saw SLG and STT and the market ETFs, I saw SLG was not going up as much as STT. In any case, I didn't re-enter the long options. I was holding the put option, short put options. Today it was falling down and I exited the full position. The stock on the at a glance chart is looking all right. If it comes back to the memory support line, I will be ready to take a long position. That will be a very lucrative entry opportunity if it does that. That is how I managed and entered and managed SLG STT. Let's look at Netflix. In one of the recent live market meet, like this session today, on Thursday 21st May, I looked at the FANG stocks and I showed, and you could see it on your Q charts also, Q Elite or Q Global, that Netflix displayed the bearish headwind at the top. It created, okay, let me change the color. It displayed a bearish headwind in the weekly chart. It created a false upside breakout. The backdrop candle color turned yellow. There was a bear release signal. In the daily, it created a false upside breakout also, and it broke below memory support. At that time, I mentioned that my view is bearish. Long position holders could be cautious and you could look for shorting opportunity. I looked at fundamentals also. Not sure if I included that. Let's look at its fundamentals. Use Q Vital. NFLX auto. I'm using Netflix as the root stock, doing a fundamental and peer analysis using the relation industry plus. That is the most suitable choice for the USA market. Industry plus, same or similar industries. For other countries, small countries like small exchanges like Singapore, you may have to choose sector or country even, so that enough number of stocks come up in the peer analysis. Of course, the comparison would not be as accurate if they are not in the same or similar industries. Still, that may be the only way to compare stocks in smaller exchanges. In any case, for the USA market, the proper choice is Industry Plus. It has found 67 peer stocks. It has excellent earnings growth, no doubt about that. Excellent earnings growth, our earnings growth is going down. If you are watching the market for a while, you would know that stock price may go down before earnings growth turns negative. It may start to go down, the stock may start to go down when earnings growth is reducing. Wall Street seems to love accelerating earnings growth. If earnings growth is going down, that may be enough for the stock to stop going up. That might have happened in Netflix. This reducing earnings growth is also a reason to look for short trades, and it was overvalued, no dividend. Fundamentally, it was allowing me to short the trade, and if you look at the industry, I click the cog icon. The industry was weak for a while. It was weak for a while. The magenta color is there for many periods. I shared the short idea when it was breaking below memory support. Let's look at Netflix today. The short idea, the analysis I did on YouTube Live was on this day. After that, it came down. When it hit the yellow direction line, it had enough profit and one would book at least partial profit. So that trade also exited with a profit. You can see for SLG and STT, I was very comfortable buying them at the very bottom. And for Netflix, I didn't hesitate to short at the very top. Netflix was not the only stock that I could short at the top. I shared another stock, I think that was on Twitter. This is my Twitter page, twitter.com Sagar here. I shared it on May 26th, 1:15 p.m. On that day, 26th May, today is 28th May, so 2 days ago, Nasdaq or QQQ was the weakest. And this time I used Q index and found all the stocks in real time that were down by at least 1%. And I shared it on Twitter, and also I shared it on Dr. Jeffrey's Discord board. Which stock came to the top? DXCM. All of these were very strong stocks. Many of them, you can see, had robust earnings growth. However, several of them were overvalued. DXCM was one of them. Because it was overvalued, it allowed me to short it. I looked at the chart at that time. Let's look at DXCM, and you will see some similarity between Netflix and DXCM. Of course, they are in very different industries. The similarity means both of them were at the very high, at or near very high. DXCM was at a very high level. It started to topple over in the daily chart, and on this day it gave me a bearish flow color candle and a reversal candle at price extreme high. That is why I have grouped price extreme or pendulum band indicator and reversal together. When the reversal happens at the extreme high, I can see them easily that the reversal happened here at the extreme high. So I could short it with stop just above this reversal candle. One more similarity with Netflix is it hit the or came very close to the yellow direction line, and I think I shared it in the Discord board or Twitter, one of those places. I had more than 10% profit. This was a stock trade I took because the XCM's options are not liquid enough. The bid-ask spread was very wide. I took a stock trade and it gave me 10% profit when it came near the yellow direction line. As I mentioned, for swing trading stocks, when a trade give me 6% upwards profit, I am going to take some money. I am not happy to turn it into a losing trade. So I did that. In fact, I tweeted it. You can see on the day price pulled up afterwards, but when it came to the yellow direction line, I shared the post, and you can imagine when I took time to share the post, I could exit the trade probably precisely at the bottom. And again, I could exit precisely at the bottom. How? Because I was looking at it using the real-time fine-tune chart. My position had more than 11% profit at that time in a day. So I booked profit. That is how I am able to trade long direction, short direction. I can trade in the middle also, and I am very comfortable also trading at the very bottom or at the very top. Today I shared a trade idea on this stock EQT. But before going to EQT, let me go back and look at a trade idea that Wadi is from Germany, very interesting person, young person. Okay, younger than me. I think um, mature enough to trade. Younger than me, very nice gentleman. He shared an idea on, I think, TNK. I want to, okay, no, not that. Let me look at the post. You can see W for Wadi. He has shared one post today also. I will not look into that. By the way, if you are logged in, new posts will show up like this dot, so you know which ones are not read yet. He shared a post on TNK, and everything was looking good except one, and I commented on that. He very nicely shared the snapshots. Great valuation and great earnings growth, positive and accelerating. So it was a star candidate. 70% stocks of the 53 peer stocks were up. That was pretty good. Real-time percentage change when he shared it. When he shared it was, okay, this is his computer time zone. I wouldn't know which time zone his computer is set. But in real time, the stock was up 7.8% at that time. Fundamentally, it was looking great. He shared the industry percentage change, and that was looking good, positive. But remember, the percentage change of an industry doesn't show whether the industry is strong relative to others. I prefer to buy stocks in industries that are stronger than others. If it is not stronger than others, the stock may be going up just because the market is going up. Market has tremendous influence on most of the stocks. That the industry is going up or stock is going up is not good enough reason to buy the stock. In my view, the stock has to go up more than the market. It has to be stronger than the market, and its industry has to be stronger than other industries, preferably, not always. You may, I also take sometimes trades when the industry is improving, but preferably the industry should be stronger than others. And it is related to energy had been lagging for a while, not really able to recover enough. So he shared the industry was strong, that was good, and he shared the chart. Chart was looking very good. The weekly backdrop was bullish. Daily came to the level where it had support many times. Actually, it came to the white direction line and started to go up. It had a it went up. This signal is not meaningful here. Just because it is green may not be meaningful, but uh, anyway, the chart was looking good. But I commented when I saw the analysis that I added the scorecard for the industry from Q Edge, and I showed that industry was not strong. So I didn't think of buying. I didn't buy. He might have bought, I don't know, but he shared the idea. Why I mentioned that is my today's post. See the industry, oil and gas storage and transportation. Everything was good, but not the industry. And today I shared an idea, and I don't mind putting a title like this. What else could be weaker for this stock to consider shorting? See the industry, same industry, oil and gas exploration and production. This is not an industry where I like to buy. The industry is weak. This is today, and I shared it just after market close, but I shared it on Twitter before market close. I am already in the trade. I analyzed it just before market close. Weak industry and undervalued, sorry, not undervalued, magenta color, overvalued stock, negative earnings growth in all the 3 quarters, all the 3 years. Revenue growth negative for last 3 quarters and also last 1 year. Today down by more than 5.6%, no dividend. And see another important thing, useful thing. Above 52-week low, 236%. Below 52 high, only 24%. Meaning the stock rallied a lot. The industry is weak, fundamentals are looking very weak, and today 87% of the 53 PR stocks are down. I think the stock recovered because many other stocks were recovering, or the market was recovering. Market has a tremendous influence on all stocks. Fundamentally, as per this scorecard, it could not be worse. It is very, very weak fundamental. The industry is also very weak, and I looked at the chart. It recovered. We saw the percentage, more than 200% from the bottom. The earnings came during this week. See, it made a peak before the earnings, then tried to go up, couldn't hit the high of this long tail candle. The backdrop color remained changed to yellow and remained yellow, and this week, today is Thursday, the shape is very bearish. In the daily, it made the peak here, when the weekly made the peak here, long upper tail bearish shape candle, then a bearish headwind came, price couldn't go above that level, and just today it broke below the memory support. The flow color became magenta. So I took a short trade as a breakout trade, looking at the weakness in the weekly, daily, and the fundamental weakness. And why I shared these two examples one after another is that if you use the industry strength also, then you will see you are able to trade with better success. Even if the market moves against you, I always say that if you are using this 360 degrees technique, aligning industry strength or weakness and fundamental strength or weakness and technical strength weakness, your chance of getting stopped out is less. The market usually will give you a chance to exit with a small profit or with a small loss. Chance of getting stopped out is less. And if you manage the risk side, as I say, it is difficult to lose money in the market. And of course, you need discipline and risk management. I use the Q diary for that. So those were review of some trades. Let me highlight one more thing. In the latest version of Q Edge, you can see the total number of industries. for one country like USA, this number will not change. However, if you are using QH for different countries, then you will see every country doesn't have equal number of industries. So you will be able to see the number of industries. We already had the number of industries up and down across all the periods, but now you can see the number of industries applicable to the country that you are looking at using QH. What else? Let me, before ending, I'll, okay, I should look at the market, right? Let's look at S&P 500. So far, the weekly candle is indecisive, but it is bullish. There is no way we can say it is bearish. Daily, weekly, both are bullish. I think the other pictures will be similar. QQQ also indecisive, but of course it is the strongest. Until this memory support is broken, then we don't have to worry about QQQ in my view. Dow Jones Industrial Average also indecisive in weekly. Again, multiple memory support lines, no memory resistance nearby. Unless those are broken, we cannot think market is bearish. IWM also has memory support, memory resistance is far away. Weekly is indecisive in all the market ETFs, but we have to say all the markets are bullish. That is a view on the market. One more thing I wanted to mention. In the latest version of Q Finder, you have an orange icon, but in olive color. You remember, olive color is for filtering or focusing on data. So what is the use of this orange? Remember, the orange color here is for today's signal. So these are today's bearish signals, and you have the number of signals coming to the top. So today we have possible go with flow short 72, gap short 19. Similarly for bullish, headwind none, box 1, etc. If I go back to the bearish signals, suppose I want to look at the go with flow signals. I can put my cursor anywhere in this go with flow column and click the orange, because this orange, the color is olive, orange is orange color filter. So it will quickly show me all the go with flow stocks, and the numbers over the other columns are changing. If I reset again, this bear button is for reset. Now notice there are 72 total go with flow and 34 breakout. I go to go with flow, click the orange button. See, now the breakout is changing to 19, meaning out of the 72, 19 breakouts are there. If I want to see how many gaps also, I may click on the gap column and click on the orange. Now I can see I have this many stocks with gap and go with flow. If I want also breakout, I put cursor on breakout column anywhere, click the orange. Now I have two stocks that are giving me gap, breakout, go with flow, and I can see one of them has a high pressure, bearish pressure. I also see US National Nat, Nat Gas UNG, it's an ETF. It's already as price extreme low. So if I am looking at the bearish candidates, I may not be interested in looking at UNG. I might look at this one, IOVA. Let me go to Metastock, close the charts. I like Q Global on Metastock and QHQ Index Q Vital working together because I can seamlessly move from one system to another system. So I am going to look at it by clicking the chart icon. I can see it had a gap down move, flow color bearish and high pressure. I am not going to short it because there is a memory support. That is how you can use the Q Finder to quickly sort through the data. And once you decided you are not going to look at them, you can click the hard button, is not of my interest, press the delete key, they are gone from my list and I can reset again and I can do another investigation. Let's look at two stocks that Dr. Jeffrey typed in, DOG, D-O-G. Let's also check its symbols is DOG. Okay, it's an ETF. It I don't trade ETFs so much except the market ETFs for day trading purpose. Why so? Because I prefer to, instead of, for example, buying SPY, I prefer to find the fundamentally strong stocks in strong industries within SPY and buy them. But of course, many other traders do trade them, and even more confident traders use the uh, 3x 3x bullish, 3x bearish. So this is DOG. It shoot up, and probably Dr. Jeffrey bought it right at the bottom and made a ton of profit. Now it has come back. If it goes up again and if it breaks this memory resistance lines, it may give a very low risk buying opportunity. It is still going down. Unless it breaks above the memory resistance, I will not buy it. And SH, it's also ETF. S&P 500 ultra short. Again, it is at a support level. Interestingly, it displayed the bullish headwind at the, you can see in illustration 10, you can use the right hand price panel to resize the screen, and you can see the bullish headwind came right at the very bottom. Let's look at the daily. There was a bullish headwind sometime earlier. In any case, this signal in itself doesn't tell that I am going to buy, but I can get ready and apply the Q trade setups to buy. I would at least put a trailing stop if I had a short position, and then if the trade setup is confirmed, any of the I could buy it. Now it has come back to the watermark support level. Again, there is a memory resistance. If the first memory resistance breaks, I may buy, because the second one is already far away. Maybe that's what Dr. Jeffrey also saw. Let's look at DOG. DOG also had a bullish headwind some time ago, and then again here after that it went up. Here, if the first memory is broken, I may not buy because there is another memory resistance nearby. ETC, let's look at ETC. Eric is from Singapore. Whenever the bearish headwinds come, I am cautious, but I don't take a short trade unless a proper Q trade setup is there. At minimum, I put a trailing stop in any long position. Now it has come down. If it goes down again, if, and that's a big if, ETC is a very strong stock, but every strong stock can come down, like Netflix, like DXCM. If it comes down, gives a magenta color candle in the daily chart, then I will be very careful about holding long position. Again, all these are for short-term trading. I am not discussing long-term investment. On top of that, there is this watermark resistance. It broke above that. This was earnings week. It is holding above that watermark resistance. The resistance can become support. If it can come below the watermark level, that will create a false upside breakout, and it will catch off guard all the people who bought at the very top. That is what happens. They will have to bail out one after another if price starts to go down. So price just needs to go down little bit below the watermark. Then first group of weak hands will have to sell. Once they sell, price will come down little bit. Next group of weak hands has to sell, and it will keep on going down until all the weak hands have closed their position. Then it may go up again if the fundamentals are strong. That is why that's a possible psychological reason why false breakouts work very well for swing trading. Now there is no buy setup, no short setup. I will take one more stock. This is a biotech stock that I shared today. how I found these stocks? I found them from Q Finder. Q Finder is very useful. Why I say it is very useful, and I use it more than Radar on TradeStation, because I can scan thousands of stocks, and when I'm looking at this, I'm first looking at the balance of power between bulls and bears, and then here I'm not looking at the orange cells. I am also able to look at the green and blue cells to see what happened throughout the week. Green is yesterday, blue is sometime this week before yesterday. So I can see all that, and I can process 1,000+ stocks easily. Doesn't take much time. If I try to do that using Radar on my computer, Radar crashes. This sonar is useful for me for 100, maybe 150. I can stretch it to 200 probably. I cannot use Radar on 1,000+ stocks. I don't have superpower computer, decent computer, but on Q Global and Q Finder I can process. That's why I tend to use them, and I can seamlessly transfer data from here to Q Vital. So I found it from Q Finder. Let's look at this stock. Let's look at AKBA. It's a biotech stock. Bearish. Let's search for AKBA. Heart symbol is for liking. Akebia Therapeutics. You know, I like to short at the top. It is at price extreme high, not unlike Netflix, not unlike DXCM, and it gave a bearish flow, and it had a reversal candle. Remember, from the home, I already knew there were many reversals after huge gap up open move. So I was looking for reversal candles, reversal signals. What I could do, I could put my cursor on the reversal column, get all the reversals, and then I did some more filtering. I found the stocks. If I wanted to look at fundamentals, instead of now looking at the 127 stocks and maybe adding some more criteria, what I could do, I could put my cursor on the symbol, not here. If I put my symbol on a stock or a number of stocks and click the peer analysis, those stocks will go to QVital. If I want the entire list now, I can put this column. You can see columnar background. You can put the cursor on the symbol column, click on QVital. That is what I did today. I got all those stocks into QVital, let it calculate the fundamental statistics. You see how easy it is. In a second, few seconds, I got all the statistics. I looked for star shorting candidate using the star button. I looked at them. I think I didn't like what I saw, so I deleted them using the delete key, reset. Now I looked for possible short candidate, and AKBA was here. That's how I found AKBA. Very fast, very efficient, and now I could carry out a peer analysis of AKBA itself. Now biotech, why I mentioned biotech, biotechs can go up down for itself. It doesn't have to be because of the industry. So its industry today was not weak when I looked at it. It was not weak. In fact, it is strengthening. If you look at one day today, you can see market hours real time is filled up, but now market hours is not there. So industry is not weak, but that is okay in my view. For biotech, I looked at the fundamental. Again, fundamental is also not that important for biotech. Valuation, you can see valuation was overvalued. Today it was down by 6%. What I liked is the chart. Again, let's close the chart. I can come to Q Vital, click the chart icon. Let's look at AKBA. When I looked at this, I thought, okay, let me short it. It's a reversal candle, and Dr. Jeffrey mentions it many times. A biotech that shoots up so much in so short time, it may drop just enough at least for me to give me a profitable trade, swing trade, short-term trade. So if you look at the weekly, daily, weekly is still yellow, but here in this case, looking at the toppling pattern, a memory resistance, and today's very bearish shape candle underperforming stock, magenta flow color, and the reversal. So this is not a trade setup as such in Q technique, but I am short in this stock also. I shared several other stocks. You will find all of them are weak. I am in EQT, I mentioned that I am in AKBA. I will not be surprised if I am already in the other trades also. The trades that I share in forum, in Twitter, there are plenty, and some people say I take many more trades, and I cannot argue with them. It's quite easy for me to find trades quickly, as I demonstrated, and I am sure you are able to do the same using Q systems. If you have any question anytime, you may contact me. I am always here. It's always my pleasure to interact with you. So if you send me something, I am happy about that. It's already more than 1 hour. Let's end today's session. Thank you for attending. I very much look forward to seeing you in my next session. Have a great week and trade profitably. There is absolutely no reason not to do that. Thank you. Take care. Bye bye.